I'm doing the strategy I was doing at the beginning of the year. I'm not exploring anymore. I'm working out the strategy that works. I feel confident. We've got Tesla going up. I've got some new positions that I've opened. Let's take a look at those right now. So we can see here I'm up $500. My net liquidation is $11,872. The big winner today was Tesla. We'll take a look at the chart whenever we get there, but I opened up 2 new positions. Like we talked about in my last video, how AI has earnings in about a month. The stock price looks like it's hit a bottom and it's coming back up. And so it held its position this morning. I decided to go ahead and open the position there. I have a $21 put. And then SOFI, it started dropping when the market opened. And then I decided to open up 2 contracts on that. So we'll get into the details on that as well. But you can see today I'm up $500 and the big hitter there was Tesla. So we can see down here, I collected $26. I did 1 contract of the May 10th, which expires in 11 days, the $21 put. And so we see here that I'm up. The price is still holding around the $23 range. And as long as it stays above $21, then I can continue to collect credit. I get my credit, and then I can roll this position out in time. I can close it and find something else. If it goes below $21, then I can roll it out in time, try to collect credit, try to roll down. So I'm trying to get out of the money. But if I can't do that, then I just let it get assigned. I own the 100 shares like I would want to anyways. And then what I do is start selling calls against my 100 shares that I own. And so the whole time I'm collecting credit. This is not a home run strategy. This is a long-term, slow and steady, nice gains over a long period of time. So before I was doing the strategy, I actually only had 1 loss. And that was like the first trade that I did doing the strategy. All my other positions were winning strategies, small wins, but consistent wins. And that's what I'm looking for. I'm looking for a strategy that works no matter what the market condition does. It gives you the ability to manage your positions and continue to make money. And so that's what I see so far in this strategy, and that's what I'm wanting to get back to. So looking here with AI on the chart, these are some old lines that I drew. We can see that we have it coming down, down, down. I mean, it's just been selling off this whole time. The last time that I looked at AI was back here at this block, and it was around like the beginning of March. I got out of the position after earnings, and then I was pretty well done with it. Now I'm back in the stock. We can see that it's been selling off this whole time. It's hit a level here at around $20, and now it's deciding to come back up here. Now it could continue to go down, but I don't see it happening anytime in the near future. I've got a $21 put that I'm selling here, and I think that's a good support level around this area. So we'll just see how it goes. I thought it was a really good place to be. We saw a stock going up here at the beginning of the week here, and I just thought, well, hey, this might be a good way to collect some money while I'm waiting on earnings to come out for the other positions. So we can see here I collected 25 cents of credit, but I opened up 2 positions here. So that's $50 on the May 10th. That's the 11 days to expiration, $7 put for SOFI. The price was going down after earnings came out, and I thought it was a great discount to go ahead and just open the position at $7. And hey, if I get in the money at $7, that's a good deal to me to own SOFI. I would sell calls against the positions, but either way, I'm not afraid of the $7 price range. So it held at $7, even though the price was going down. I feel like I got a really good credit because I was so close to the money. And again, it's not a bad place to be whenever you're comfortable at that price at $7, and you can collect the most credit. It was very close to the money. So far, I'm really pleased with the trade that I made here. It's settling here at around the $7 range. It's at $7.04. It was bouncing around, $7.14, $7.04, around that area for most of the day. So really good to see. I feel like I got a really good credit for that. And even if the stock does go down and I get assigned, I still have $50 here of wiggle room here on my break-even point. And the name of the game of the strategy is to always collect credit. Collecting credit, you always will be able to reduce your break-even, get it closer to the current price if it goes against you. That includes rolling puts, getting assigned and selling calls. As long as you're chasing credit, you can always drop that break-even price down and eventually get to that price if it's going against you. Right now, I feel confident in SOFI. I think that the price isn't going to go much lower than $6.50. I think it's a super low price for SOFI. and I'm not afraid to own it at that price. So it was really good to see that the price went down because I opened up my position and I was able to get some good credit for it. And then whenever it goes back up, which I believe it will, then I'll be able to continue to chase the price with the puts. So I'll be rolling those puts out and continuing to collect credit there. So overall, ugly day for SOFI, right? We had a big drop down after earnings, and I was able to make some money even though it's down. And as long as it doesn't go too far down, right? But I don't believe it is. SOFI is a stock that I want to own anyways, so I feel like I got a good deal here. So Palantir is another stock that I really want to own. It's got earnings coming out, and I don't care what the price does. I don't care if the price goes up super high. I don't care if it goes up to $30, if it goes down to $15, whatever it is. I want to avoid the earnings. I want to put these calls on after the catalyst is over. And then I'm wanting to collect regular income from these positions. I'm not looking for home runs. So I don't want big swings. I want predictable, easy stocks, easy price action to place these trades on. So I'm holding off on Palantir. I'm waiting for these earnings to come out on May 6th here, and then I'll consider opening positions. If I had enough money, then I would own all these stocks that I have right now. I'd have my money in AI, SOFI, Palantir, and I'm not too sure about Mara. That's probably the one that I'm most speculative about because it's a new stock that I've been watching. I'll be keeping an update on Mara, keeping my tabs on Mara, because I think that it will be a good stock to own in the future. Also with Affirm, I am watching it. I've made money on Affirm, but I think long term there could be some serious risks with Affirm because it's a buy now, pay later style credit system. And I think that in the future that's going to crash. I think a lot of people are relying on the buy now, pay later style credit, and that eventually people are going to be borrowing more than they can afford, and they'll have a crash or something like that. So I'm really wanting to keep my distance on Affirm, but I am watching it just to have tabs on it. I have traded it before using the wheel system, and it's paid off very well. So just wanted to keep my tabs on it. Just want to watch that stock, and so far it's holding the levels, around $33 right now. So just want to keep my eye on it. So we see here with Mara, it has earnings coming out on May 9th, and the price has come up and reversed. It's playing around with the 21 and the 8 EMA here. We see kind of a shelf forming here, right? It leveled off at around $20. Can it break this level? Can it break the 50-day moving average? That's going to be the question when earnings comes out. Is Mara going to be able to beat that level, these levels here? Is it going to have good earnings? I think the halving of the Bitcoin has something to do with the cost of Mara. So I'm not sure exactly where the expectations lie for the stockholders and what the price action is going to look like after earnings. That's why I'm holding off. I want to watch what the stock is doing because you can see it was all the way up to around $34 at the end of February, and it's been selling off this whole time. So I don't want to be caught in this kind of downtrending motion here. And we can see that it's very well possible that we are done trending down. It's broken this trend line, and it could want to test this downward trend here one more time before it decides to come back up. So that's why I'm holding off on it. I really want to see confirmation that we do have a higher low here and that we are actually taking off into a new direction. I think after this catalyst of earnings is going to tell us exactly what the stock wants to do and whether or not that I want to open a position on it or not. And again, for me, I don't have enough capital right now. I've got my position in AI and SOFI, and that's taken up all the capital that I can use for the wheel strategy right now. But I always want to keep stocks that I'm interested in on watch, keep an eye on it, just in case when the time comes, I'm ready to open positions when I have the money. And now looking at Tesla, man, this thing gapped up huge today. So we have potential for full self-driving in China. So Elon is getting that set up. A lot of confidence has boosted in the stock, and we can see that it has gone up and gapped up in a big way. Is it going to hold these levels? It's hard to say. I mean, 200 is a big level to break here, so we'll see what happens in the coming week. It's going to break, if it breaks 200, then we're going to be looking at the 200 moving average. We could be seeing the 50-day moving average here start to go up. Of course, we're seeing the 8 and 21 EMA going up. So we have a lot of things changing here very quickly in this stock, and I put 20 shares in. I've got 20 shares right now. I wish I could put more in, but that's, again, Tesla is a long-term play for me. I'm very much interested in the stock. And before I was selling put spreads on it. And here's the thing. I lost, roughly like $3,000 on Tesla on these put spreads that I had on. The problem is that I ran out of time. And so I can't look back and get FOMO because I lost so much money when the stock was going down. It's a learning lesson for me. I manage at 21 days to expiration, and my put spreads were expiring. They would have been, if I would have held on to them at this point and got my money back, I would have not been managing at 21 days, and that's not what my plan was. So I didn't, there was no way around losing money on those put spreads, even though the price has gone up now. The only thing that I can do now is look at my risk and see how much I can make with the plan that I've got. So I've got roughly $3,000 right now in Tesla. That's the 20 shares that I've got, and it's up. So really great to see. I'm excited about it. It's good to see that. I'm glad I own shares in Tesla. So I really feel like I'm in the driver's seat now. I feel like I've got my strategy that was working at the beginning of the year. I'm owning stocks and companies that I'm interested in, and they're working out. So I think the plan that I have right now is working really well. I don't want to make any changes until I've actually played out my plan. And my plan is to have roughly 50% of my capital in T-Flow, then own roughly 20 to 30% in stocks, and then the other 20 to 30% in the wheel strategy. And what I want to start doing is start putting in regular deposits in my account so that I'm able to grow my account and have more opportunities to buy and open put positions and also put money in T-Flow. There's also another dynamic that I need to cover, and that is when T-Flow makes money, when my option trades make money, whenever I start selling shares in the long-term stocks, where does that profit go? How much is going to go into T-Flow? How much is going to go back into the stocks and the wheel strategy? So those are the things that I need to be working out as I'm making profits. So I'm a new options trader. I'm trying to get the money back that I lost just a few weeks ago when the market was going down. I had too much risk than what I was even noticing, and I had lost nearly half the money that I made. My goal is to make the money back that I started this year, $16,000, by the end of this year. So right now I've got roughly $11,800, and I've got to turn that into $16,000 by the end of this year if I can. If you want to join me on that journey, hit the subscribe button. If this video was a help to you, hit the like button, and we will see you on the next video.